Hello, Joe. Solo man Joe pulled off the show yesterday.
Yeah,
Now I can bail on you all the time because I know
not
you
quite
can
as
do it.
not quite as fun, but it's
Talking to yourself.
yeah, talking
You
to
do that
yourself.
all day long. What are you talking
I
about?
know, I know. I always wonder if that's a psychological disorder or something, but I sort of feel like I'm just, analyzing stuff in my head, playing devil's advocate on
Yeah.
some stuff.
No, it was awesome. I listened to
But
it. It was great. It was really good.
I tried to cover a lot of ground since I had the opportunity to share
Yeah,
screen.
that was
So,
awesome.
oh wait, I have a share button here
Yeah,
still,
you
so
should.
I can. All right. So
Oh,
maybe we'll start
yeah,
working that in.
yeah. I've got
I
one
thought
of
I
your
couldn't.
links up, so we'll go ahead and start there.
Okay. Um, which one is it?
Largest asset manager sees huge opportunities in cryptocurrency.
That's right. This is the BlackRock guys, Larry Fink, and he's another one like Jamie Dimon and others. I mean, his whole day is spent around accumulating more assets to manage. So he's never going to sit down and take a blockchain course and figure out crypto. But this tells me that all
Right.
of his institutional guys, I think he confirms all the institutional buying that we've been seeing lately in down in the article. But it just shows another. I mean, they got I think 7 trillion in assets under management, and so people are asking and people are investing in it. So he's going to give the people what they want, product and
Yep.
in crypto, and he sees big opportunities. But if I'm not mistaken, I think he's still thinking about payments and digital, stable coin type stuff. But the digital payment ecosystem is where it seems like he's gotten thus far. Which, hey,
Yeah.
I take that as a win.
Yeah.
Um,
I'm so frustrated with fucking Jamie Dimon. I can't imagine working for an asshole like that because, you know, the stupid shit he said yesterday that either shows one, you don't want to try to understand it, which is probably the case, or two, your entire technical staff, I guarantee you, has briefed you on crypto, talked to you about it, blah, 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 blah. And you're just choosing to ignore what they've told you and act like you don't understand it because your comments say you don't understand how it works. If you sit there and say, have you read the algorithms? I don't know if I believe it's only 21 million on Bitcoin. It's like, dude, seriously? I mean, do you
yeah.
think that it's just the stupidest shit? It just pisses me off.
Well, yeah. I mean, he doesn't really understand parts of it, but the fact that he's inching toward it to me, I'll take as a win. I mean, so many people don't get the
Well, he's
technology
only
side.
doing it because he can make money on it. But
Of course,
I mean,
yeah.
there's no, hey, I want this. If he didn't have to, he wouldn't. That's for sure.
Well, we've talked about this. When you're managing that level of money, you aren't chasing down degen opportunities with
Yeah, of
billion
course not.
dollars.
You're not
You're
staking your funds on, Crystal. Yeah.
You're trying to like take that $7 trillion and turn it into 7.025 trillion.
Yep.
And not go 6.95 or 6.5.
Exactly.
So, and he's doing a lot of pension fund money. So, there's specific rules on that, what they can invest in. So he's not going to be the guy who's ever going to get completely around it because his responsibility is to shareholders and to the entity itself. But,
Yep.
I guarantee there's people in there, I mean, that are really digging into this deep. And, his probably, at that level, you're just saying, give me one slide with 5 bullets on it. That's all I want to see. I trust you. You've got the MIT PhD in
I think that they haven't done
quantum
that
mechanics.
already. They've already done that. He's already had that briefing. That's why I think he's so full of shit. I think he's already had that briefing.
Yep.
Team is just like that asshole. What a douchebag,
I'm here. I just had to dump the VPN. Or maybe it was your side.
Hello.
Yep. I'm here. No, I had to kill the VPN. I wasn't sure if it was my side or your side. But yeah, I just think it's a different. Can you hear me?
Yep.
Okay. I just think it's a different look, if you have $1 billion, you want to, if we go on to this currency apocalypse theory that the last one standing is $1 no matter what, even if it's devaluing here and there, then you have $1 billion, you're going to want to give it to guys like this because they're not going to lose it. We're in the process of making money. So we take more risk, we dig into the math more and the protocols and, try to find those jewels because we know, or gems, because we know when big institutional finance actually figures this out, that they're going to come pouring through the door. And we just want to be there, selling the tickets to the party.
Want to take their money.
Yeah, so that's the way I look at it. That's nothing wrong with that. But I like any encouraging sign where they move, even if they say stupid stuff. If they're talking about it, I think it's good.
Well, talking about it's good. There's no bad publicity is the old line. So that's good. That's good. And, I think it's obvious to a lot of people that they feel threatened when they say shit like that. So that makes it even better. So,
yeah.
Absolutely. All right. So let me go back to that tab. So we'll clear that one out. What do we have here? Joe, the newsman. Coinbase and Binance move to diversify, stablecoins under scrutiny. Before you dive into this article, let me quickly make a comment about the difference between decentralized and centralized.
Okay.
Coinbase, look, it's fine to jump in. They're launching an NFT marketplace, right? They haven't launched a marketplace, but when you are this far behind the 8 ball, I get it. They have a big customer base. They feel like they own them. Most of them probably aren't yet out, doing real DeFi. They're not out buying NFTs on OpenSea. And so they feel like, well, we can own them. But it's like, you just look at how slow moving, a company like this is and how restricted they are in kind of the normal corporate world, because they're not going to launch something that's decentralized. They're going to launch something that's just centralized, pulling all the NFT shit in from everybody else. So I don't know. I'm amazed at these companies, and even Binance US, I'm pissed, is going public. I get it. It's a money grab. They want the cash. It's, helps the company grow, blah, 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 blah. But I don't know. I think it's for the CEO of Coinbase to say, we're all about the decentralized world, blah, blah, blah. And then, to run this needed centralized organization. I agree. We need this to on-ramp people. And then to go public, I think is just, it's just more bullshit, but whatever.
Well, I agree with everything you say, but, U.S. market, Binance US has to go public. It's the only way, and Coinbase is kind of restricted because they already are public. So, and they get slammed for, issuing that interest on, was a yield bearing token, or there was something, a minor play, but, they got smacked on it by the SEC. So, they can't operate without keeping the SEC happy.
Of course.
And so, although I do agree with you, they tend to be followers to try to be the cool kids when they're kind of like the dorks in the back of the room, doing all this shit.
Which is flipped. So the nerds are the cool kids.
Yeah.
And these are the corporate dorks.
These are the meatheads.
Exactly.
So, but they're going to do NFTs, whatever that means. But I thought what was really interesting in this article was, they're opening up a wait list for early access to this NFT. But why would, again, I guess this is where all kind of the newbies have to go in the US.
Right.
So they don't trust going off the platform. A friend of mine who was trying to buy some Azuki a few months back, I said, he doesn't have anything. And I said, look, you need to get onto Coinbase first and then go from there to your MetaMask wallet or whatever ledger you're using. Well, he moves his money into Coinbase and they won't let him move it out for 14 days. Yeah. So I'm like, well, that tells you a lot. But what it's just that they're just the dullards in the space. And, whatever happened, I used to make that claim about Facebook and, and look what happened there, so I'm not right. I'm just expressing opinions because there's plenty of dumb people out there that go for the dullard play. So, and they don't have the depth of knowledge that we do about the protocols and the math. So they're never going to be able to figure that out. So they go to Coinbase because it's vetting everything for them.
Yep.
So I don't fault users. I want more users, and I don't fault Coinbase, but it's an on-ramp. It's an off-ramp.
Hell yeah.
If you're an American, you're going to need those. You need those, actually. But what I thought really was interesting here was that if you go down this article, this who is this gal or person who's writing? She signs at the bottom, I believe. Super, really good alpha that she puts in here. I think it's Monica Ghosh.
Hold on, let me get there back over there. Okay.
Yeah. So, they're going to do Coinbase doing the peer-to-peer, but there was something down here that I really like.
Oh, it's an interview transcript. Okay.
Yeah. So there's, an IMF report on global financial stability that, you should definitely just Google IMF Global Stability Report 10.12, I think it was, 10.12, and you'll see it. But it talks about crypto from an IMF perspective and, talking about, cutting growth rates and things. So there's some good macro data there. But what was interesting is that an Asian implementation, I found what I was looking for. Monetary Authority of Singapore has granted a major payment institution license to XFIRS, which issues XGD, a stablecoin backed 1-to-1 by the Singapore dollar. So, when we heard this stuff last week about Singapore doing some kind of regulatory enforcement, they're issuing their own stablecoin, pegged to the Singapore dollar 1-to-1.
Yep.
So that's big to me.
Yeah, I agree.
Nigeria does it. Yeah, whatever. But, because they're doing it too. But Singapore does it. Singapore is the most, it's based on the British legal system, and it's always rated as the least corrupt, at least in Asia, market with British tort law in there and a bunch of other things that, protect different things that we're used to. Not at the level of American protection, but still really good. And so I thought that was pretty interesting out of that article.
Absolutely.
The Coinbase. So
yep. No, I agree. Let me get wait, where's the next one?
We can skip the IMF one because I told people how to download that. Unless you want to talk about it.
Too late. I closed it.
Okay. Yeah, we got to go fast. So the next one down was Bitcoin bulls set for stampede and then 6-figure forecast. This is more information in here about institutional folks, pouring into Bitcoin right now. The next one, we'll probably save this one for another talk, but it's about DeFi versus CeFi, and kind of fits into that stuff that you and I have talked about, you should be able to hit stuff on centralized finance as well as decentralized at the same time.
Oh, that's what I wanted. Oh, yeah. We had that conversation. Actually, let me pull this one up if I can find it.
And the other two, just quickly, I'll just give the headline, was the Pantera CEO wants a reminder the day before a U.S. Bitcoin ETF launches under the predicate of, when the CME futures launched, what happened to Bitcoin in December 17, and then what happened after Coinbase IPO listing in April. I think it's a bit of a stretch, but, people do buy the rumor and sell the news. So you might want to think that through. And then about Binance Smart Chain receiving $1 billion to bring the next billion crypto users onto BSC, which I thought was pretty impressive myself.
Yeah, that's incredible. Who funded that?
Pull it up. I was thinking it might be CZ. Let's see. I don't know if it's set it. I'm scrolling through real quick.
Oh, no, this is a fund that they're going to invest in projects.
Right. Yeah.
So talent, liquidity, builders, investment and incubation. Holy crap.
Yeah, 500 million for just that. So,
wow. That's a chunk of cash.
The investment director for the BSC Accelerator says the thriving blockchain startup ecosystem has encouraged us to invest our time, efforts, and resources in helping companies build from 0 to 1. With the $1 billion initiative, our focus is to widen, I'm paraphrasing, to build cross-chain and multi-chain infrastructures integrated with different types of blockchains. We're gearing up to bolster the adoption of crypto and blockchain to accelerate its growth globally. So one final thing on that. So BSC, when it's truly decentralized, all of a sudden it's in a different category than Binance I call it Binance Malta, but
yeah. Well, and look, he's been planning for even Binance.com to become a decentralized organization eventually. I mean, he's said that. So I think he'll go full on decent on BSC, and really the only thing stopping them right now from Ethereum level decentralization is the number of validators staking, right? So those are all hand selected. There's only 20. That's the thing that keeps them. But I think they did that as a safety measure, a security measure, more than anything. But once they start spreading that out to the levels of people staking to validate on the chain, like in the hundreds and thousands of people, then there's not a lot of difference between Ethereum and BSC beyond speed and low fees. And I'm assuming BSC. I wonder if BSC is going to do the same. I bet they're not. I bet they're not going to do the ETH 2.0 upgrade, but I have no idea. I haven't read the roadmap on that.
Let me ask you a question. So if you want to play BSC, say a layer 1, is that the BNB token that you would still buy?
I think that's what they're staking. Yeah, okay. I think they're still staking for the validator nodes. I'm not sure, but I'm pretty sure that's what it is.
So, we talk about the strategy of BTC to ETH to layer 1s. Think about that.
Yeah.
BNB I don't own any BNB. I have in the past when it was at like 15 and 20, and I think I sold in the 200s. But
yeah, I've made some money on BNB.
Yeah, but I don't own any right now.
Well, look, I still believe in. I think that Binance and BSC are going to continue to succeed. They have the largest number. BSC has the largest number of small retail wallets of any platform. It is the place where retail traders go. So I think they have a good chance to continue to succeed. They just have to the community has to get better about filtering out the rugs, the scams.
Well, also one other thing to point out about BSC, a lot of those small retail traders, they're coming from places, I'll just pick a few countries, Tanzania, Botswana, Bolivia, countries that are, not as fortunate as say we are, or as prosperous for a variety of reasons. No malign intended.
Right.
So it gives them access to banking systems and stuff that, I'm going to call it banking systems, financial systems that aren't layered into cronyism and corruption in their own countries.
Yep.
So, and a lot of these people, are in villages and things like that where, $10 is enough food to feed a family of 4 for a month.
Yep.
So when you see those little dollars and pennies, it's orders of magnitude greater than the impact to us. So I'm all for it. I say keep going.
Yep.
Bank the unbankable.
Yep.
Bring them into the economic system.
Exactly. And if I don't know if you've ever used the BSC wallet. That's basically a clone of MetaMask with a superior interface and performance. But there's a direct integration with Binance.com. So you can connect your API key to Binance.com and cross your tokens back and forth. So instead of having to bridge off one chain and onto another, you can send them back over and have it go through the centralized exchange and then back out to the other DeFi, the other protocols you want to go out to. And it's a great way to, fund your DeFi transactions. It's a really nice wallet. They've done a really good job of it. It hasn't been updated in a while, or it hasn't. I haven't looked at it in a while, but I was really impressed with the wallet. Better interface than MetaMask, that's for sure. So
yeah, I'll take a look at that. I mean, I do see that you could hit. I have noticed that you could hit the BSC chain in MetaMask, just like you could hit, Coven, Rapston, Wrinkleby, Matic, all of them. I haven't done anything yet with that, but.
Speaking of wallets, there was a bunch of shitstorm on Twitter yesterday about the new XDeFi wallet, which is supposed to be a competitor to MetaMask, supposed to be incredibly fast, has a ton of DeFi protocols built into the interface. It's all supposed to be great, but everybody's up in arms because they refuse to open source their code. They claim they might eventually. And there was an audit leaked of the wallet that basically, from what I could read from the Solidity developers that were commenting on it, the fact that that they even had the errors they had in their code showed a level of amateurism from a development perspective that shouldn't even have been like it. Like it's like one of those things that now has become every expert developer knows don't do this shit, and they did it, right? So I'm actually kind of curious. I had signed up for the beta a long time ago, played with it for about 10 seconds because it just wasn't very functional at the time. But I may give it a shot anyway just to see what it's like. But it does make me nervous. You know, one of the things I like about MetaMask is I know that code has had the eyeballs of thousands of people on it. You know, and I trust that. I don't know what goes on in the halls of DeFi Incorporated or whatever they are, and I don't know, you know, how well they do security in their organization. So I don't, and since I can't see the code and developers can't comment on it, I don't know if something malicious. Yeah, I don't know if something malicious gets inserted into that code, whether they meant to or not. You know, so yeah, makes me nervous.
Well, the thing about MetaMask too, you know, remember that was out of Consensus New York.
Yeah,
and you know, like you said, this has been around for as long as I can remember.
Yeah,
you know, I mean, at least 2017.
Yep.
And you know, it's like everybody's tried to hack that for forever. You know, and it's like so everybody has repaired it. So it's robust, it's stable. You know, as long as you don't do anything stupid like give away your seed phrase, you know, you're pretty safe there. So
yeah. Now, like I said, I think we desperately need upgrades from a wallet interface perspective. I'm a big believer that, you know, MetaMask needs to start integrating. I would prefer that all of DeFi, the interface be the wallet, right? Like I actually like using MetaMask on iOS because I like that I'm in the MetaMask wallet app. And so as I'm browsing protocols, DeFi protocols in the system, my wallet's already enabled there, right? So, and it's part of the functional of the app. That's what needs to happen on the browser, right? We need to, the ideal to me is a browser built, so fork Chrome, fork Brave, whatever. And Brave actually has a wallet built in, but their functionality sucked the last time I tried it. It was just bad. And here's a browser that's been built for the last 2 years, supposedly meant for crypto. We need a browser dedicated to crypto. And by that, I mean, it takes care of all of the shit that you normally have to deal with from a wallet perspective. It has all the DeFi protocols loaded into it. It automatically loads and unloads different wallets that you're utilizing. It, you know, allows you to put in, say, blacklist blockers like My Crypto wallet is a nice wallet, but it sucks because it's not like DeFi enabled. But they have a blacklist integration of sites that are phishing sites, that are hackers or whatever, and that keeps you from accidentally sending your coins to some scumbag in some, you know, of the ones they know about. So anyway, I'm a big believer that I think that the browser, the wallet on desktop needs to be the browser.
Right.
And I want my world contained in that. And that also reduces the security weakness footprint and everything else. So,
well, that's kind of interesting because it's, you know, you think about, we have all this antivirus stuff running, everything from Windows Defender to McAfee to Norton, and to protect you from hitting those bad sites from a virus standpoint or malware standpoint,
right?
Not crypto specific.
Yep.
So that almost gives you like a sandbox where you have walls around it, just for crypto and DeFi.
Yeah, and built-in VPN, right?
Yeah.
And then you can build in things like TradingView tools and chart tools and your favorite dexes, or the person, whoever's building the browser could actually be a dex, right? Like if Matcha built a browser, that would be frigging awesome. Or Dex Guru built it as a browser. And then it's integrated in. All my transactional stuff is there. Then the wallet can also be your reporting tool, right? Now you build into there the things that like Xerion and Zapper do into the browser, and it's locally stored for you but synchronized to your mobile wallet, and now you can see everything you've done, and you can actually make notes on the things you've done. Oh, I was dumping this token because I wanted to buy more of X token and blah 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 blah, or I was sending this token to Joe to pay him blah 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 blah, right? That's where I think we need to get to with wallets. we're way behind where I'd like to see us. But look, I mean, it's a complex technology and it's a dangerous technology to mess with. And
the analog I'm thinking is in that sandbox is kind of like a, Quick In, QuickBooks, whatever the ones are these days, where, it also generates all the reports for you automatically. Too.
Yeah.
And for compliance purposes, as well as
taxes,
reporting. Yeah.
Yep. Yeah.
That would be pretty interesting. So
build it all in.
Joe Lubin, if you're listening.
Yeah. Joe, hire me as a consultant. I'll tell you what to build.
Yeah. We're pretty cheap. We're only, give us a call.
Speak to yourself.
No, I mean,
my rate's going up.
I know. You have to take it up. Otherwise, you deal with, shitty clients who don't pay. So to me, I always charge premium rate and, higher than everybody else. And if people want me, they pay.
Otherwise, you waste your time with idiots anyway.
Yeah. So, there was a couple other things we wanted to talk about. What was
real quick? You mentioned something earlier about the unification of DeFi and CeFi, DEX and SEX. Which sounds odd.
Hey, I like that.
So I have not taken a deep enough dive into this. I was hoping to do it before today's show, but this is something called OpenOcean, not Ocean Protocol. That's a different project. I went to the wrong one earlier. This supposedly allows you to integrate between DeFi exchanges and over here centralized. Right now, just Binance, but essentially it's a platform that lets you trade across centralized and decentralized exchanges, which, I mean, you know how I live, Joe. That's my entire life, right?
Yeah.
So if I could theoretically hop in between them, it looks like they have their own exchange as well, right? So I read earlier when I was looking at this the other day that there's also potentially in here, and I haven't looked at it closely enough, an aggregation tool. So you could initiate a trade and it will, I think this is the idea, it will fire that trade across the best price on DeFi or centralized and or if you would say you wanted to prioritize by execution, whatever, and let you execute across the best deal for you. So anyway, I'm going to take a deeper look at this, but this has a lot of potential for my life, man. It could make my life a lot simpler. So we'll see.
Yeah, no, I think that, look, thank God Polygon fixed the gas fee minimum. Now just transactions are flying again. And instead of paying like 1/100 of a cent, you're paying 1/10 of a cent. So who cares? But
yeah, exactly.
So I can now go through all of them, the 6 odd platforms I'm on and do all the claiming and restaking and everything now in about 15 minutes.
Right.
But it's pretty much a speed frenzy to do it. But the thing is, if I could do that all in one place and see everything, trade in and out there and daily compound there and all of that, I would be there in a second.
Yeah.
Because, then you look at other sites like, say, the Gelato or Combo guys, where you can basically automate all that too.
Yep.
Where it does it for you automatically.
Yeah.
But it has to be on layer 2. So yeah, I'm a big fan. But let's do a big talk about, if you want to go in depth in the future on DeFi and SEX and DEX, basically. Because I have
let's
some
do
ideas
that
there too. Let's talk more about that in the future.
Cool.
I think you said you had a user that was asking questions about where
lending protocols.
Yeah. I do most of it on Aave myself. It's the one I trust because it has 15 billion and TVL. And you can borrow. I think there's only 5 that you can borrow there, at least that I see. On the Polygon one, but they're also on Avalanche and they're on ETH, at least. And I just feel the safest there. I don't know. There's other ones that give higher returns, but my strategy is to borrow the half. Well, in ETH you can take 75%, but I only take half. Borrow half, and then I do stuff, staking in other DeFi protocols and earn yield there. And, basically watch my risk number on Aave and have a nice dashboard so you can see when you're kind of getting in the danger zone of liquidation.
How often are you leveraging like that?
I have pretty much a running thing there, like right now, let me pull it up.
So are you borrowing to increase how much you can invest, or are you borrowing to hold on to the assets you have and then trade with the lent money?
If I understand that right, what I'm doing is taking the money and staking it in other DeFi protocols.
So you just want to have more to play with.
Yes. So my feeling is, look, I'm just kidding in right now. Now, I tend to really take USDT most of the time, or USDC, depending on interest rate.
Right.
But look, you're borrowing at, here's my dashboard. Like I got a USDT loan that the APY is 3.70. So that's like regular APR for the year.
Right.
Okay. But I'm getting also a reward of 4.72% APR in Matic.
Yeah.
So, they're paying me, 1.02% to take the money.
Awesome.
Right? So then I take that money and I go over to like one of these, either a stable coin pool where you get 30, 40% on, they're all over QuickSwap and Sushi. Maybe you get 8, 9, 10, 11, 12, sometimes a lot higher. Define has some too. What are their big ecosystem pools here? I think there was either Eco or Popular. Oh, they did reopen them. Oh, okay. I'll come back to that in a minute. The Matrix pool, because I cashed out on that one yesterday. 27% for the month, by the way, just so everybody knows.
Nice.
But no, like here's USDC, 35% interest on DeFi. Now that's APR, so you can, daily compound that. And, 35% is going to be like 170%. So if they're paying me 1.5% or 1.02% to take the money, and then I'm putting it in here and getting, 160% APY, how do you not do that all day long?
Right.
So,
well, wait. Okay. So you're taking what you get there and dumping it into a yield farm somewhere, a stablecoin yield farm, and taking what you can get from that, and then, paying back the loan. And
eventually, I don't have any incentive to pay it back right now because of, they're paying me to hold the paper.
Yeah.
So, but a lot of, I use it in like the Mona USDT pool on QuickSwap, which is, unfortunately retreated to about 1,000% APY. So I'm taking money they're paying me to, and then I'm turning around and generating a 10x for the year if everything stayed the same, let's say.
Right.
But it's minting me a ton of Quick every day that I use to buy all the other stuff I want.
Right.
So
when you say that Aave's paying you to take the money, walk us through how that works for you.
Okay, so go to.
Can you see on the screen where I am?
Are you in the borrow tab? Or are you in?
I'm in
markets.
I'm on the homepage, I guess.
Yeah, you're on layer 1 too. So I'm looking at the Polygon connection. But so they basically have markets, and on Polygon they're doing, Matic, DAI, USD, USDT, Wrapped ETH, and Wrapped BTC. So, I have Matic and Aave and ETH staked into Aave or parked there, deposited there.
Okay.
So Aave, just because, I believe in it long term, it's not paying much, 1.25% APR. So I'm not there for the APR. I'm there for the borrowing power below it.
Right.
And then Matic is paying totals out about 3.82 and ETH about 1.68. So I put that in there.
What do you put? Okay. So so the first thing you do is you come to Aave. Let's walk a user through.
Yeah. Okay.
So you come to Aave. And let's say you want me to try USD coin, or what do you want me to do?
I want you to deposit. You have to deposit first. So click that deposit tab, and it shows you the ones. It kind of links to your wallet, and then it shows you what you have available and what you could deposit. So right now I see, I'm on the Polygon side, Wrapped ETH, USD, Matic, and USDT. Also I see WBTC, Aave, and DAI. So I take what I want and just you click, let's say you're going to deposit ETH. So you click that, you're almost there. Are you on Polygon? And
it's like giving me it's being a pain in the ass.
Okay.
Oh, wait. Am I on mainnet?
You might still be on mainnet. No, I saw Polygon logo on the top right. Hit that, see the top center of that window? You can select Polygon in there. No, the pop-up window, I'm sorry.
Ah, that's the
See
problem.
that? Yeah. And then hit browser window on the left. Yeah.
Okay.
Right? So the first thing you would do is you say you're going to
There's
go.
nothing in this wallet. Shit. Hold on. Let's see what we got.
Well, you can hit that deposit button and we can to the menu tab to the right of, oh, you're in deposit already. Sorry.
Yeah. Okay, well, this is a fail.
Yeah, but let me just, I can walk you through it. So here what the user would see in that big window is the things that could be deposited.
Okay.
So let's say you were showing up with 10 ETH. You would click the wrapped ETH button, and it'll show you what your max have to your wallet. There you go, to deposit. And then you continue. And it's a couple of, 30 seconds, a couple of clicks, authenticate in your wallet, that kind of stuff. Well, then that is now on deposit, getting that, less than 2% interest rate, which, again, people might want to go to other platforms if this is all you're going to do. Like Celsius gives higher and Crypto.com gives higher. But I just trust Aave a little bit more.
Yeah, makes sense.
Okay. So, and I'm doing a different strategy. Remember, I'm borrowing against it and then staking it in stables mostly, or stable pairs.
Okay.
So I'm not worried about not being able to pay it back. I'm not going into high risk, 2-token pools.
Right.
It could go berserk and IL could crush you and permanent loss, things like that. So you make your deposit. Then the next menu tab to the right of deposit is called borrow. And so you click there and it shows you what the things you can borrow. And then it shows available to borrow. That second row is, available. So that's how much you can borrow. And then it shows you the third one is variable APY. It's the rate. So you'll see the rate that the first number is what they charge you to borrow. And the second number is distribution APR, which is what they give you to borrow. So it's incentivization from Matic in this platform. So they give you Matic for the loan. You get, say, look at the USDT. I see a 3.7% and I see a 4.72% for distribution APR. So I'm paying 3.7. Now that changes sometimes depending upon, how much they're holding. So that number can go up or down, but it doesn't, I don't really worry about that too much because of the yield I'm getting on the other platforms. So I put in the 10 ETH, and let's just say that's worth 40,000. You could borrow up to 30,000. I would caution people to borrow 20,000, take it only up to 50 just to be on the safe side, and then take that 20,000 and then go invest that on another platform. So, like for instance, if you were going to do ETHmatic on another platform, I think I saw some at like 60% on DeFi today. You basically flip the USDT half and half into ETH and Matic, and then you go to that pool and you stake it in that pool. Or you just take USDT and split half into USDC or whatever and put it into a stable pool or DAI or anything. If you don't want to deal with the issue, you're just capturing yield. Point. So then you basically get the yield coming off, and you essentially can use that to pay the loan back. But I don't do that. I just keep accumulating that yield, or if it's a token I want, or I use that yield to buy tokens I want.
Okay.
And so it's just a cash generating machine to invest in other, opportunities. So then, if you start getting nervous or maybe the interest rate goes too high for you, then you basically close on a pool and, come back to the borrow thing. And right there, I believe, or dashboard button. Yeah, you go to the dashboard button and it'll show, the stuff you have on deposit and the stuff that you borrowed. And there's a repay button there. You just push the repay and say how much you want to repay, and you put that amount in, and it, approve in your wallet and all that, and boom. And then adjust that. If you can see the top, I don't know if, you can't really see because you don't have anything in it, but it has a health factor button up there on the above the borrows. It shows borrowing power used, borrow composition, collateral composition, health factor. So you watch that number, and it's green right now on mine because my current LTV is only 35%. So I haven't really max that at all because I try to stay safe.
Yeah, it's smart.
But you see that'll go to yellow and to red when you're getting in the danger zone. So
Okay.
where you got to worry about is if there's a flash crash or something like that. So that's why I keep extra margin in here, just in case, extra cushion, just in case that, let's say something freaked out and Matic went from wherever it is to 20 cents for a day, I'd be like, not liquidated. It would hold.
Right.
But, of course, at that point, I'd be taking those stable coins out of the pools and buying the hell out of Matic because I believe in that so strong. Matic is Polygon. In case anybody doesn't know, they changed their name. And it's the same with I keep Aave in there and I keep ETH in there.
Yeah.
Now, there's other platforms where you can, get more. I mentioned a layer 1 called Drops, which is working on staking NFTs. You get like a 40% reward in DOP for taking a loan.
Yeah.
But DOP goes from like 110, a buck 10 to 280, a buck 80, 250, 205. It's too up and down for me.
Right.
Because I want stability.
Sure.
In this. So I don't have to endure that kind of situation. So this is the one, most of them, Curve does this too. I honestly love Curve, but I haven't put anything there or done anything on that front with them or figured it out. But, I love them because of their market cap to TVL number.
Right.
It's 0.06.
Right.
Aave's is 0.24, which is still much lower than the average in the space, but it's the most stable. It has the most on deposit. It's the cleanest to me, or the least risky of all. So that's where I would, now that's for an American investor too.
Right.
A lot of people that aren't American like crypto.com because you can get credit cards attached to it where you can spend crypto and, use it on Airbnb and get all these rewards. You stake a certain amount, you get all these discounts on Airbnb and all these other places. But I think you could get it, but I think that's kind of like the guys that were doing all those offshore bank accounts at HSBC and others and getting credit cards and then using them in the US to spend money that they had, I guess, hidden. And, to me, I think you're just asking for it if you do that kind of stuff. I just recommend against it. Another one is Celsius, which Mashinsky runs that. They were in New York for a while. Super smart guy. Really, really bright on the math.
Nice.
They moved over to Tel Aviv just to, because Israel's a little more crypto friendly than the US right now. That's one to think about. But my first choice is Aave. So I hope that helps with the
that was great,
listener. Man. But that's a good strategy. Now, there's another interesting strategy that kind of works on this too. That let's go to Crystal. I know we talk a lot about Crystal, and because we're in that Azuki Matic pool over there, banging a couple of 100% interest. That's rewards in Crystal. So what I'm doing there is it's a similar thing. So there's other pools. Let me see, other mines, excuse me. A lot of them use the words differently. Like I saw USDT Matic at only 16% APR.
Right.
I saw, there was something else here I saw that was interesting. Like some Link maybe, or ETH Matic down here at 18.67%, Link Matic at 35, Aave Matic at 30. You come into these things with, my strategy here is that I'm in the Azuki Matic one just because I had it already. So this generates Crystal to me at a 264% APR, which, as we know, APY is probably 800, 900%.
Right.
If you daily compound. But I take that Crystal when it comes in, and then I go over to the pools column, to the right of mines.
Right.
And I look at, some of it goes into the auto Crystal just because it was easy. But now lately I've been moving into the earn Curve, earn Aave, and earn BTC. Because, honestly, I'm ashamed to admit it, but I don't own any BTC.
Oh, shit.
I know. I'm just always like, I love all the other stuff better. I don't want to sit and hold and watch and wait and all that. I did that with stocks, and it just crushes me because I don't have anything to do. So I need action. So,
right.
So what I do is I take the Crystal, I put it in the Aave earn, the Curve earn, and the BTC earn. So what this do is it gives you Aave and Curve right into your wallet. It's not even on here. And then I go back to define with that Aave and that curve, and I use it to recompound every day into those Aave and curve pools, because everybody knows that I like those right now. And so basically I'm getting free Aave and curve essentially to auto compound back into the Aave and curve farms on Define that are still burning at, I think Aave is 150% and curve is around 190 or 200, 195. So, again, if you're DCAing or, worried about dips and things like that, you're getting it at zero. Yeah. So, I still count it as like 0.01 cent or something for math purposes, but, it's just builds these other pools. So you're levering up, but levering down on risk, which is pretty cool. And so then when the Define then gives me the awards in Define, then I'm splitting those back into Aave or curve and putting it back in again, or I'm doing router and Define, or I'm buying crystal and coming back into the other pools. Nice. So there's these very intricate routes you can take.
Cycles, yeah.
Yeah, you're taking free stuff and getting more free stuff and more free stuff. Yeah, so you just keep scaling them up and scaling them up. Then when little dips happen, like today, I think there was a sell-off on crystal this morning. I don't know if it's recovered, but again, I don't really care. Right. Because, I buy more at that point.
Exactly. That's what I just did before we got on this call. Yeah. I bought more. So yeah, you can loop in, you can be in the Azuki pool, get the crystal rewards, put the crystal in the Azuki pool, generate Azuki, come back to the Azuki pool. I mean, it's so much fun.
Yeah. I mean, I have like 10 layers in these.
That's awesome. That's awesome.
And the thing is that it's not like you're going to unwind all 10 if anything starts looking funky to you. You just really have to pull the plug on one.
Yeah. Yeah. That's great.
And readjust. So I recommend that strategy a lot. Again, everybody knows I like Define. Define did two things, I think, today. They announced the launch on Phantom, which everybody knows is another one of my favorite layer one plays.
Yeah, they're getting ready for their cross-chain deployments.
Yeah, that's still in audit. Lots of bitching in the channel, but I'm like, better safe than sorry. And
yeah,
the CEOs,
people are idiots complaining about this shit. It's like, what is wrong with you? Just let them make sure it's safe.
The bug the auditor found, according to the CEO, was actually a bug where they could have drained the wallets. So
and people are complaining.
And people are bitching. So I'm like, just, stop chasing the pump.
Please stop being fucking idiots. Jesus Christ. Get like a week time horizon, not half an hour, please.
Yeah. So this is one of the reasons I like Define. It's just, I've liked it for a while, but I just like the fact that they're willing to wait.
Yeah, I love this new tool because I can't wait till this thing is cross-platform. This
router,
this fusion thing they did.
Oh yeah.
Because for those listening, essentially what it lets you do is take as many tokens that you have in your wallet and combine them all into one token. So get rid of your dust, get rid of whatever else, and then it routes them into one platform. Now, let's say you do all that, and then they allow you to do this cross-chain. So that's where they're going, right? Yeah. It's like you can also do this with your LP tokens. You want to get out of a pool and you want to convert into something you want to put in another pool. You load the LP tokens in, it does everything for you. You don't have to go back, click, pull out the max, find where you bought that LP pool, put it in the thing, manage it, withdraw it, blah, 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 sell the tokens, then buy the token you need. Everything is done all at once for you. You put in the LP tokens, you put in the tokens you want, you tell the token you want to come out the other side with, click the button, and bam, it's done.
And it probably is going to have that where you tell it the chain you want it to come out.
Imagine, I've got coins on BSC, I got coins on Avalanche, I got coins on Phantom, I got coins on Layer 1 Ethereum. I want to put them all towards a new yield pool on Polygon.
Yeah.
Boom, 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 boom. It's all there for you in one click. And then you deposit them in the new yield farm. It's really smart. I love the way they're laying the groundwork. I think this is a really well-run product. Had to reschedule my interview with the CEO, but I'm looking forward to it. I'm hoping next week. I I love what they're doing over there.
Yeah, it's probably, you know, I mean, it's probably my favorite one right now, in Polygon for sure. If not with Router, I mean, who knows? It could be, you know, so much bigger going forward. We just look at the other ones trying to do this. Yeah, I've got no complaints. One thing I did do here, we talked a lot about the Matrix ETH pool. You know, that did roll over, and I saw some chat this morning where they were saying, is there going to be another one? And they were saying no. And I just want to alert everybody that there is Matrix ETH in there again. It just rolled today. I'm not in it yet, but I will be. 1,425% APR. And there's also a Matrix DFYN, which is, yeah, that's the one I'm actually going to go in. 6,741% APR.
Which farm section is that under?
I'm under ecosystem farms.
Okay.
I'm going to connect my wallet. I just haven't been connected. All right.
I don't see it.
Let me see.
Matrix?
No. Yeah, that's it. It's Matrix-ETH, Matrix-DFYN.
There is nothing there.
Is you MetaMask? Are you an ecosystem? That doesn't. Wait,
you said, yeah, ecosystem farms.
Yeah, I don't see Agar. You might need to clear your cache because I definitely can see it. You want me just to pop a screen up?
Sure. Well, I mean, I guess people can trust us, but
yeah,
sure.
no, it's there.
Okay.
I connected my wallet and it was still there. I thought maybe it was, you know, getting ready to go. But again, this is set up. So I did it last month for a month. I mean, you can pull it out anytime you want. I mean, but the tokens do vest. So you only get 20% of the tokens when you pull out at the end of the month. And the rest is on that 2-month cycle, which I don't have a problem with because then I don't worry about selling or anything.
Yeah.
But
you know, I forgot I had this over here.
So, you know, I put it in and I ended up with like, you know, 27% plus return in a month on it. And, you know, more tokens. So now I just got a little matrix stack sitting there trying to decide what to do. And I thought that they weren't going to renew these because something in the chat said no information at this time about 45 minutes or an hour ago. But then lo and behold, here they are. So I think they don't want to give tip-offs to everybody and they just quiet launch everything like this.
Right.
But, you know, as soon as we finish this up, I will be piling into those two.
Yeah.
Just because why not get the 6,700% APR for a couple of days? At the end of 30 days, it was only down to 500%.
Right.
And again, daily compounding calculator says, what do we say? 6,700% interest. That's 57. That's 6. You got it up already? No. Okay.
No.
Let's say we did 1,000 and we daily compound.
Which one are you on?
I'm doing calculator site.
Oh, no. I mean, which pool are we talking about?
Oh, this is the Matrix one.
Oh, so, yeah, I never could get it.
Yeah, so, look, we're talking about, let's just say for a month.
I'm over here staking some more DFYN tokens I forgot I had in that old pool.
Okay, so here's what happens. You start with 1,000. If that APR held for a month, that turns into 167,000. Now, we know it's not going to. And you compound daily. It's just huge, huge numbers. So to me, it's probably those high rates will be around for a couple of days maybe. But you jump in now and you build your stack. And then if you start getting nervous, tired of it, you pull out. Like, I don't really like the ETH pairs anymore because I think ETH is going to go to like $10,000 or $15,000 here pretty soon.
Right.
And, you're going to get crushed on a permanent loss because I doubt if the other token's going to keep up.
Sure.
With it. So I'm kind of staying away from the ETH pools just for that reason. But it doesn't mean I don't like them long term. It just means that right now, I just expect the big ETH move.
Right.
So, I mean, most of these are correlated to ETH somewhat, but I just can't see. I mean, maybe everything goes up 4 or 5x, but who knows? I kind of like ETH as a standalone right now, parked in Aave.
Yeah.
Borrowed against, and then it just does what it does, and I don't have to think about it. But I wanted to touch on that since we were talking about Define.
No, that's great.
And so the other thing we did do a little on Crystal. Remember, you were in that Libra LP pool with me for a while. I'm still there, just so everybody knows. But the update is that I'm down dollar value, but I've got like double the LP tokens.
Yeah.
So if it recovers Libra, if it does recover and it's paired with Matic, then I should make out really, really well. But if it doesn't, then I don't. But but I only threw a couple $100 at it. So again,
exactly.
This is my roll the dice play.
Yeah.
And hope Libra gets their shit, get it done. But at the same time, a lot of these, I'm seeing a rotation out of these smaller DeFi platforms because I think everybody's moving into ETH and BTC right now off of them, and waiting for them to dip and then come back and buy.
Yeah.
Because they'll be after.
Damn, look at that.
Oh, is that Crystal?
That's Libra.
Oh, that's Libra. All right, what the fuck? Hold on. What the heck? Sorry.
Wow, that's 10-minute candles. Never mind.
Yeah, there we go. Yeah, that's where
it looked really good. 10 minutes.
Yeah, for 10 minutes.
That's still, that's a nice little bump.
I'm not seeing it reflected over here yet because there's a little bit of a lag with the LP token.
Let's see. I mean, up in the last 30 minutes, up 9.35%. That's not bad.
Well, there you go. So, people are listening to us, I guess.
everybody aped in. That's great.
But look, this is the whole play with DeFi is it's not just standalone, park something and borrow and do that.
Exactly.
Like one of the things I was thinking about I ran across real quick. I ran across this other play called Centrifuge, which just, you guys Google it. They got some videos out. I haven't dug in deep, but they're using tokenizing assets and using, issuing an NFT for that asset. And then you're getting interest. And so I started thinking about, they show a car and you can basically securitize anything.
Right.
Of course, I'm sure the SEC loves that. But, and they talk about unleashing the $30 trillion USD and, asset base that never gets into the capital markets at all. So I started thinking about Alchemix, one of your faves or our faves. And, and I started thinking about that Tesla example. And I go, heck, so you could go park your 150 grand worth of ETH, borrow your 75 to get your Tesla, and then you could securitize that Tesla and borrow another 37.5 that then you can go park in stable coin pools and earn 40% on, which
beautiful.
Then you turn around and put back into Alchemix and buy your pool or whatever.
Exactly.
And I mean one you dive into. I don't mean a.
Yeah.
But, all of a sudden there's this ability to create
That's brilliant. Yeah.
So, let's start dig into Centrifuge when you can, and we'll talk more about that on the next one.
Yeah.
But I just thought, I love the business model. I don't know if they're pulling it off. It looked like there's something happened. God, look at Libra. That's still going, man. Yeah. But, those are the kind of things you think about. So the reason I started Aave is because of all of them, I don't feel I have to worry about that one.
Right.
And I take the stables, convert to what I want, put it in something else, take those yields, put it into something else, take that, circle it back, or put it into something else, and just keep spiraling up. And that's the game right now. And for newbies, it's it sounds scary, and it is. I mean, it took me 8-9 months to get comfortable with all of this stuff. I mean, I still fret over missing those 680% APRs on Azuki ETH liquidity pools on layer 1.
Right.
But I didn't know it. I didn't trust it. I was still scared of people hacking the platform. So, do your research off of whatever we say. Always look at it and verify it for yourself. Don't just ape into stuff because we're talking about it, because not that many people are listening to us. So it doesn't really mean anything.
Yeah.
In the sense of getting it, jumping into something at an advantage. But look and watch and learn and be safe.
Absolutely.
And, it should work out pretty well for you.
All right. So I got a few things for tomorrow. I'm ready to drop for today, I think.
Okay.
This project, NFT project, Avame, is really cool. Really fantastic model. I interviewed the two guys the other night that run this project. Really cool guys. And I love what they're building and how it works. But we'll talk about it more. Flash Stake is from another interview, a project called Block Zero, which is essentially a DAO-based Y Combinator for DeFi. And they use this tool. They have a new version coming up, but this is almost an Alchemix type thing. But you can utilize it right now just with their Flash token, but they are going to be making it so you can deploy for other yield farms. And the idea is the reason they built this is people in the community that want to invest in the projects that are coming in their pipeline. You get tokens for investing in it, and everybody that's a member of the community gets tokens for investing in these projects. But you can then dump your Flash tokens in here, take your yield in advance, and then the yield gets automatically paid off because your tokens are staked, and they have you set a time frame. Like, you can set 364 days, you can select 50 days, whatever it is. So you'll get your yield in advance off of your tokens, and then can deploy that capital into investing in one of the portfolio companies or whatever you want to do with it. But it's an Alchemix model. But they let you borrow up against 100% of your future yield.
Yeah.
And it's not a liquidatable event. You're just paying off as the yield progresses what you borrowed. And cool concept, cool implementation. So we talk about that a little bit tomorrow. I want to talk about Kitten a little bit tomorrow as well.
Yes.
I have some ideas for him, and I want him to start executing on it. So anyway, by the way, this platform I use for trading, most of my trades now go through dex.guru. Really love this platform. Fantastic cross-chain, BSC, ETH mainnet, Polygon, Phantom, and multiple DeFi pricing because they're using the ZOX protocol in the back end. So anyway.
Yeah, finally, I'm just checking that out. Also, a lot of people are talking about in the same category with like Ohm and, all those other kind of bonding type plays. Klima is being talked about a lot right now. And
that's the climate change one. They plant a tree or something.
Yeah, but they're doing
buy carbon offsets.
Yeah, and you pair them in bonding type structures and things. But they're doing their public sale is on Monday. So I'm doing some more research. And a lot of the guys that are in Ohm have been talking about this. They've been talking about liquidity as well, LQTY. They've been talking about, because everybody's this bonding thing that you brought to my attention, everybody's talking about it. And there's ones that now it involves NFTs and bonding. So I'm going to dig more into that. So I have some more stuff to report on there. But it looks really, really interesting. And I see a lot of people moving that way. So, and finally to that user that wanted to know where to deposit coins, again, we didn't even talk about Alchemix in that context, but that is one where you don't pay the loan back.
Exactly.
So you might want to look into that one as well and see if that fits with your risk tolerance level.
Yeah, check the podcast with Zeus in DeFi, in Mission DeFi, because he goes into how it functions. And I'm not Zeus, Scoopy, because he gets into how it functions and does a really great job explaining it. And they have some really amazing shit coming in version 2. And that's the primary focus of that interview is him walking through this modular system they're building so that anybody will be able to build tools around their platform on multiple chains, multiple yields, all kinds of really cool shit.
Yeah, I got to dig in deep because I have a feeling everybody is setting these platforms up doing all the stuff that I'm doing manually.
Exactly.
So make my day a lot easier. All right, buddy.
Have a great one, bud.
All right, you too. I'll see you tomorrow.
Take care. Bye-bye.
Talk to you. Bye, everyone.